Hey everyone, welcome to the weekly review. This next week is going to be pretty intense. We have both economic events and lots of earnings. Economic events, we have JOLTS on Tuesday, we have FOMC on Wednesday, we have PMIs on Thursday, and NFP and unemployment on Friday. And for the earnings side, we have Apple and Amazon on Thursday, sorry. Yeah, we have Microsoft on Wednesday. Oh, on Tuesday, sorry, Microsoft on Tuesday, and we have Meta on Wednesday. Now, looking at this, I post the SPY chart a lot, but I don't think this is about SPY at all. I think it's about QQQ and IWM. And first of all, let's look at IWM. We are at 224-ish. I'll call it 225 for argument's sake. Let's look at positioning a bit, how it changed. And we are here. There's a bit of room until 230 and let's say an extended goal of 240. Why I say it's about IWM and QQQ is because it has become pretty obvious that the market was not long mega cap techs. It was long mega cap tech and short small caps. And what we've seen since the CPI print and the breakout in IWM has been a squeeze in IWM, the leveraging on the long tech short mega cap, short small cap trade. And this is a mechanical trade. We see it overshoot because of the squeezy nature. Like for example, I thought we would cap out here, and this level has been confirmed as a resistance because of what happened afterwards. But we went pretty high, pretty much like $5 above this level, like from 222 to almost 27. And there's two events to watch next week. One is the FOMC, and the question is whether the Fed will cut. Uh, if the Fed cuts, small caps explode. And regardless of what happens for earnings for mega caps, tech will fall because it's about the positioning, not about earnings or fundamentals. The long tech, long mega cap, and short small cap trade is too crowded. There's too much money in it, too much leverage, and it will unwind. And even though theoretically speaking, rates coming down is bullish for everyone, it is not. It is more bullish for IWM, for small caps, and it will cause deleveraging to happen in the long mega cap trade. And almost regardless of earnings, it will make small caps go up, potentially as high as 240 next week. I don't think the Fed will cut because we had the GDP print this week and it came in pretty hot. This doesn't really mean anything because Q1 came pretty hot, came in hot on the initial print as well, and it got revised down significantly. And I think it will be the same here. But for now, it will give the Fed a reason not to cut and wait until September. Even if they don't cut, I think there's potential to go to 240, potentially overshoot a bit. It depends. I don't know. But the perfect storm for this trade to unwind is for the Fed to cut and for mega cap earnings to be meh and get a negative reaction. Now, on the other side, like I said, perfect storm to 40, not perfect storm to 30 for IWM. On the other side, we have QQQ, which doesn't look that bullish. I'll go lower time frame. This looks a lot like this. Maybe it will actually be something like this. We drop a bit, whatever. Doesn't matter that much the way the pennant looks in the end. Only that it doesn't go up. And we start earning season with next week the mega cap with Microsoft, then Meta. Oh, sorry, Microsoft here. Meta and Amazon and Apple. None of these charts looks particularly bullish. Like they look like QQQ, and it's not that strong. Like, I mean, we haven't even taken this candle. We have shown a stop in the drop, but we haven't shown true bullishness yet. And Microsoft, I don't know, should do well. For Meta, it's a bit more complicated because uh, Meta has, in theory, their best earnings this quarter and the next quarter in Q3 because of election spending. But everyone knows they will get a lot of election spending. So the expectations are really high. And it's still relatively easy to not meet expectations because expectations are very high. We'll see how it plays out. But there are ways for mega cap earnings to disappoint, just like Google had decent earnings, but somehow the market was disappointed and it dropped a lot since then. Tesla dumped horribly. I mean, anything can happen from that perspective, and the threshold for a good earnings at this late in the cycle is very high. So I think there's potential for mega cap earnings to make tech drop, but that won't make the whole market drop. It will only make tech drop because of the wind of the long mega cap trade. And if the Fed cuts, get ready for some crazy shit to happen, and that's kind of the reasoning here. But let's look at tech from a positioning perspective. We are at 462, so around here. And let's say price was here, we would get a lot of uh, positive delta in this quadrant, like this. This is the delta. And even though we are at 460, you can see there's still a lot of delta here. This will feed a move down. This will get all unwound. And we are only 5% away from 440, this huge uh, put wall. And if we go below 440, all of this delta for all of this OI kind of goes away. It won't go to zero, but the deltas that would be lost here and the amount of shorting that the market makers need to do to get rid of all their calls, not shorting, they just need to sell their longs. So basically, they let's say a 40 delta call, it means they have to own 40 shares of QQQ um, to be delta hedged. But if that 40 delta call goes to 20 delta, they will have sell half their longs QQQ on that contract. So this will happen if we go all the way here, and it will make us extremely overextended positioning wise to the downside. So 440 is going to be a support very likely, and it's going to be huge. This is what it looks like positioning wise for QQQ. Based on Friday's close, we are at 48. And I think if we go below 440, we will go to levels similar to the bottom in 2022, beginning of 2023. We will go all the way here, like to 10, even below 10. So 440 is a buy if we get there. The other aspect of this is timing. As I talked about in the past, there are two moments when the market usually turns. One is mid-month because of OPEX, and the other one is at month turn because of end of month, beginning of month positioning changes. And when we look at this SPY chart, I took this into consideration. And ideally for us, we would get a flush at the end of the month, meaning next week. It doesn't have to be exact, uh, an exact date. For example, we had OPEX on the 19th. The 19th is here, and we picked on the 17th. So we picked here, closer to the mid-month calendaristic wise, but not on OPEX exactly. And now we should be bottoming out in this range. But if we do not bottom here, meaning we don't have a clear bullish reversal, meaning we should be getting to the all-time highs by end of month. in this week if we get, I don't know, bullish all over the place. But if that doesn't happen and we don't have a clear reversal up, then the bias is that we will continue slow bleeding until OPEX. Because if we don't turn next week, we have missed the turn window. So chances are we will continue in this trend because we are now trending down. The trend will continue until the next mid-month window, which is August. So basically, either we bottom next week, and it can be a couple of days, like we go here by the second, let's say, and we do a double retest of the bottom, like 5-6, and then we go up. It still works even if we go a couple of days into the other week. But if we do not have this kind of capitulation move, which would be defined by QQQ at 440, then we continue trending. We probably go like this a couple of more times. The bottom window goes all the way to mid-August, something like this. Uh, I I kind of hope we get the capitulation move to 440 QQQ. We have earnings to help us out. Now we just wait and see it play out. I still think very short term. On Monday we have the potential to go all the way here. We can see the AVWAP has dropped a bit and is now confluent more or less with this trend line. I think we get another rejection from the AVWAP, and the market should do nothing before at least Microsoft earnings. So we go up, we get rejected initially, maybe we overshoot a bit, we get rejected, we do something like this, and then we wait for Microsoft earnings. Microsoft earnings make us either go up or go down. I think more likely that we go down. But it shouldn't be a huge move because the market will wait for FOMC on Wednesday, and FOMC on Wednesday will give us direction. Maybe something like this: we go down, stay here, and then wait another day for FOMC, like this, and then FOMC gives us up or down. Yeah, that's kind of it. Remember, it's about QQQ and IWM, not SPY. SPY is kind of like the in between those two, and we have to wait to see what happens. Have a good one. Bye bye.